have some annual figures for the regional economies for 2016, and one of them is Azerbaijan. So Azerbaijan economy contracted last year by 3.8%. It's the first contraction since 1995, when Azerbaijan has experienced 11% contraction. So over the last 2 decades, it was constantly growth. So what was the reason of this contraction? It was mainly construction sector, which was down by close to 30% in 2016, following slight decline in the previous year. So the construction fell as public expenditure on the construction was down, as the government focused on the fiscal sustainability in the light of the low oil prices. The growth in Azerbaijan that was kind of driven by the construction, it has turned to contraction also driven by the construction sector. Going forward, we can say that given the low base of 2016, in 2017, Azerbaijan will probably have a positive performance compared to 2016, but this growth will probably be a weak one as expected by all the analysts and international financial institutions. But at least the positive figure is guaranteed in case there's a stable oil price at the current levels and the low base of the previous year. While economy contracted, Azerbaijan also had a high inflation last year. By December 2016, annual inflation was 15.5%, and average annual inflation was 12%. Again, it was one of the highest in Azerbaijan's recent history. It was only higher in 2008, but the difference is that in 2008, Azerbaijan has a growth. So inflation over that time was driven by the, so to say, overheating of the economy, as there was a strong domestic demand. But this time it was driven by external, by the fact that Azerbaijan had a significant devaluations, and probably exchange pass-through effect had a significant impact. So effectively in 2016, with high inflation and contraction, Azerbaijan experienced the stagflation. But again, going forward, like the growth, inflation will likely retreat somewhat compared to 2016, given the high oil price. And in case the current monetary policy and fiscal policy continue, there will be low domestic demand, which also will help inflation to retreat somewhat. One of the most important reflections of this poor performance of Azerbaijan in 2016 was exchange rate dynamics. So we can say that there was almost one-sided trend in the exchange rate, and it was a constant depreciation of Azerbaijani manat against USD. And the exchange rate peaked at 1.92 level in late January 2017. Depreciation accelerated right after the government and right after the monetary authorities announced move to the full free float of the manat. And generally, especially in the small economies, as they move to full free float, there is always extreme volatility in the beginning, and it might be both upside and downside. In Azerbaijan, it was limited. But still, if you check the chart, you can see that right after 12 January, there was a sudden upside move in the exchange rate, but it was quickly reversed over the last few days, as demand for FX is not that significant as it first appeared, since there's with the slow economic growth, there is less demand for imports probably. And additionally, given that the government announced that they are creating some kind of a not fund actually, but transfers to central bank from state oil fund to support macroeconomic stability. Likely this money will be used to support, to help some entities to service their foreign obligations. So it effectively means that these entities will not take this foreign exchange from the market, thereby easing the pressure on foreign exchange within Azerbaijan. Going forward again, with the expectation that oil price will remain at around $50 for the rest of the year, and the continuation of the current monetary policy, which is relatively tight policy, exchange rate will probably remain stable, more or less stable at current level. Naturally, obviously, there would be volatility, but compared to 2016, volatility will be two-sided. In the 2016, it was constant depreciation, but in 2017, sometimes it will go up and down, but eventually probably settle down at around current exchange rate levels. Speaking about the exchange rate, the kind of most dynamic or interesting trend has been observed in another neighbor of Georgia, and it's Turkey. So as we spoke in the previous interview, the Turkish lira was one of the worst performers over the last few months, particularly following the election of Trump in US. As dollar has started depreciating globally, other emerging market currencies started losing value against dollar, and Turkish lira was one of them. Obviously, some political domestic developments in Turkey has had also impact on that, but probably they just multiplied a little bit the impact going on globally. But the standard textbook advises when you have depreciating currency is that you have to increase the rates, and this was followed the monetary policy rate. This was followed by, for example, Mexico, which increased rates 4 times, last being yesterday, to support its currency. So depreciation in Mexico was far less than in Turkey, and actually Mexico is considered as one of the most vulnerable economies to Trump election. And the reason Turkish lira depreciated far more was that monetary authorities in Turkey did not raise rates for a long time. But eventually, over the last few weeks, they opted for higher interest rate, but not using standard benchmark interest rate. Rather, Turkish Central Bank has several instruments at its hand, and they stopped providing liquidity through repo and other instruments, but rather they were pushing banks to borrow at a late liquidity window, which is the interest rate cap is 11%. So effectively, over the last 2 weeks in Turkey, we have double-digit interest rate, which is called right now effective funding rate of the central bank. So Turkish lira is provided by the central bank at above 10%, and it has helped Turkish lira to depreciate. It has halted the depreciation of Turkish lira, and actually, as dollar itself also globally has stabilized, the Turkish lira, supported by the higher interest rate domestically, also stabilized, and actually over the last few days it gained some value. And another reason of the stabilization of Turkish lira probably in January is probably that government also, fiscal authorities also try to spend less. So actually in real terms, meaning that adjusted to consumer price index, expenditure in January, public expenditure in January was less than in the 1 year ago. And it also kind of limited the supply of lira liquidity in the market. Going forward, if the current policy mix of tight monetary policy and tight fiscal policy continues, lira will probably stay the same, stable more or less. But it also depends on Fed's decision this year. Its general expectation is that Fed will increase the rates 3 times. But if there is some kind of change, some kind of deviation from this belief, then Turkish lira might face far more volatility. So on the one side, the future fate of Turkish lira depends on Fed's decision over the next few years, and also Turkey is heading towards a referendum on constitutional reform in April or May. So politically, it might be challenging for fiscal authorities and monetary authorities in Turkey to remain committed to tight monetary policy. So depending on which policy mix they choose, if there is an easing of policy measures to support domestic growth, then Turkish lira might still lose value. But if current policy mix continued, lira may well stay stable and actually gain some value. Moving to another neighbor of Georgia is Russia. So we have preliminary results of economic performance for 2016. Growth was negative in Russia, but it was the contraction was far less than in the previous year. It was almost flat, so negative 0.2%. As we know, leaving aside the recent appreciation of Russian ruble, the ruble has been depreciating over the previous 2 years, and it has significantly helped exporters of in Russia. So improvement in economic performance in Russia was driven by strong external demand, while domestic demand was remained suppressed over the last 2 years. Going forward with the current appreciation of ruble, which was driven by higher oil prices, probably we would expect relative stronger domestic demand in Russia as household confidence returns and they start spending their deferred spending, so to say. So, and with the probability that the ruble will not be or allowed to be appreciated significantly, Russia will also benefit from external demand for its products. So with relatively cheaper ruble compared to 2, 3, 4 years ago, Russian producers will have competitive advantage, and they, as the imported goods will remain dearer. So this strong demand, both domestic and external, will drive agricultural production and manufacturing within Russia. So, likely after 2 years of contraction, Russia will return to growth driven by domestic and external demand. But again, like in the case of Azerbaijan, growth will probably be limited, far away from its peaks in early 2000s. Thank you very much. Dilim Adlova.